Hey guys, so I'm quite excited to show you today some findings which I've made combining RSI and MACD, which would have helped one take advantage of some big gains and to prevent some big losses as well, or even make money if you're shorting. So the basic concepts I use are number one, that bullish or bearish divergence on the RSI. Let's start with bearish divergence. Bearish divergence is when, for example, you have a higher price, but the RSI is either at the same price, at the same level, or lower. Okay, so here, for example, it's at the same level. So it's not as strong bearish divergence as if the RSI was lower, but it's still something to watch out for. And then two is that the similar concept applies on the MACD. So in this histogram, if you see if you see getting progressively lower, like lower lows, but you're actually seeing higher prices, then that's, as you see over here, for example, like higher, and higher prices. That's a suggestion, an idea. That's an indicator that that things are going to start turning bearish. And using both of these concepts together can actually be quite powerful, because sometimes the RSI, which is an indicator of a technical indicator of price momentum, comparing recent changes in price going up and price going, recent increases in price and losses in price or decreases in price, can sometimes be inaccurate. Hence, using both of them together can be very effective. So here, for example, as I mentioned, you generally want to be looking for not only a higher price, but a lower RSI. So here the RSI is the same. But if we go down to the MACD, you will see that the MACD actually has a lower low over here. So if you were to short this exact point where you see the RSI more or less the same level over here, it's actually a slight lower low, but comparing that, as I said, with this is a good indicator that this this level over here, okay, where the price was 7,550, compared to this level over here, where the price was 5,900, that there's going to be a downswing from there. So I have a downtrend. I have made an average of a 10-day period following this indicator. So for example, for this 10-day period, it's a minus 27% drop. Looking here, this is of course the best example, and this is an awesome example because you would have caught the exact top. So here, for example, you see the MACD coming down. Now, one might have said, okay, well, the MACD over here, let's just get the other side. The MACD over here, here we have a price, if we go all the way up there, we have a price of 16.7K, and here the price is 17K. So one might say, okay, well, hey, we have a lower MACD, and the price is a little bit higher, and that would be a justification for selling, and fair enough. And if you had have gotten that price, it would have been pretty decent if you'd have sold, I mean. But here is the real crux of it, of the argument, is that we have a slightly higher RSI over here. Okay, look at that. And not only do we have that slightly higher RSI, but look at this, the MACD has fallen again. So a super strong indicator over here that we were ready for a bearish momentum to start. And look at that, that's pretty much the exact top. So I wish I had have known this technical stuff, technical analysis better at that time. But in any case, moving on, we have another example here. Okay, so the RSI is slightly higher over here, and the MACD has fallen quite a lot over here. Let's look at the prices. Okay, So the price over here, 11.3K. The price over here, 11.6K, right? So the price has gone higher, but the MACD has fallen. So, you know, if you looked at RSI alone, you wouldn't see any bearish divergence because this is actually going up. But if you look at the MACD and you see the MACD is going down, then that means that, you know, it's not good. So what this is saying is that RSI alone is not the greatest indicator of a reversal, a trend reversal. But when you combine both of them, you can get really powerful information, as you see here, for example. You know, the RSI is going up, the MACD is going down, bam, we fall hard, you know, 45%. RSI is steady, MACD is going down, and we fall 27%, okay? Here is an opposite scenario where the RSI is going down. So again, this is because if we look at the prices here, okay, look at the price. We can look at the price here, actually, starting from here. Close of the candle, 6,000. Okay, the RSI is lower over here. Wait, am I getting this wrong? Close of the candle is, sorry, 8,600. The close of the candle here, 7,800. Okay, so the price is going down and the RSI is also going down. So that's nothing out of the ordinary. But if we look at the MACD now and we see, okay, RSI is steadily going down, but the MACD from this point, you will see over here, so around this area, you will see that the MACD is actually going up, right? Whereas the price, if we go from here, 7,800, the price has actually come down here, right? So of course it would be great if you could catch this exact bottom. But if we're being realistic and we look at this, we would say, okay, well, this was a high. You could also look at, for example, these points to see if we might have bought there instead. So let's look at, for example, this point. So if we take this point over here, let's just draw a line over here. Oops, why is this not working? Move that over here. So let's say we'd have taken this level, and then we're assuming that we chose this as the highest point. So let's take this low over here, and let's make that a bit fatter. So we're taking this low over here of 7,900. And then, as I mentioned, the lower low on the MACD over here. So, gets out of the line. So this is 7,800. So pretty much exactly the same price level. Hence, you know, it's not really a strong indicator that the market is going to go up. Let's look at the next one. Okay, again, about the same price level. Over here, one could make the argument for buying already. 7,800 down to 7,000. So it would have been quite reasonable to buy at this level over here. And this is a point where you would be wanting to watch out and then to place the buy. So on a 10-day period from here, it would have been about a 17% move if you'd caught this green candle over here. Okay, so the point I'm trying to make with showing this line over here is that, you know, it looks very pretty and very easy to catch these exact tops and exact bottoms like this, but very often you will catch it just a little bit before. For example, here, as mentioned, you would have caught it over here at the 7,000 level, and it would have fallen down to, you know, 6.4, which is a little bit scary. But if you see these indicators continuing to to show this this divergence from the current momentum, then you can just add on to your position, okay, and then sell, as I said, after. Well, in these examples, a 10-day period is not a bad idea. Of course, if you would have held from 20K and realized that the momentum is very powerful coming down, you may have even shorted all the way down. But for a lower risk and higher, well, for a lower risk, you would take a shorter period. Okay, so looking at the next example. So here, the red line, the red arrow indicates that the price is a time for the price to go down, okay, based on the indicators. The blue arrow here is an indicator to watch out. So why is that? So what are we seeing here? We're seeing a price over here, 8,300. All right, that's the base price. Over here, we're seeing higher RSI, and we're seeing a price of 9,800. So nothing out of the ordinary. But what are we seeing over here? So this is not what you would call a strong incline whatsoever. There's a slightly lower low, okay, but this is not a huge difference. So that's why you don't want to get overexcited, especially since the RSI is going up. There's no bearish divergence on the RSI. It's just a slight indication that things might be about to change. So this is where I would be watching out to see what happens next. But now look at this. Now we have this price of 9,650. And now look at the RSI over here, down here. It's gone down, right? And what price do we see? 9,822. Now, what else do we see? From here down to here, okay, we have the MACD at this level. So the MACD is going down and the RSI is going down, but the price is doing what? It's going up. So that's a very clear sign that things are going to turn bearish. Similar to when we hit 20K, this is, well, actually, this is even stronger sign, because this is basically everything you could possibly be looking for. The bearish divergence on the RSI, bearish divergence on the histogram, with the higher price, all right? Going up to 20K, we actually saw a slightly bullish divergence on the RSI. Sorry, not bullish divergence, but just higher highs on the RSI with lower lows on the MACD. So that's, that's an indication that it is going to go down, but this is a much stronger one, lower lows. And this purple line is by the way, the price, the level either going lower or, yeah, well, it's going lower. So as I say, this is the clearest indicator you can possibly have that the price is going to come down. And if you'd have held 10 days, you would have made this minus 17%. If you had I don't have I could just use this. But if you'd have held even longer, 40%. I mean, it's these are really pretty powerful indicators. So this is just a sort of educational video to show where you can see these divergences. I'm going to make another video now showing where and why I think that we're very close to being due for an uptrend, another short uptrend, short to medium or maybe long-term uptrend, who knows. But yeah, I hope you enjoyed this. If you have any questions, let me know.